Hello, I'm Miranda Mizen. I'm a principal at Tab Group. I'd like to introduce a new pinpoint comprising 8 charts that we're publishing on Tab Forum and on our website www.tabgroup.com. It's our first quantitative study, and the purpose is to document the trend of average effective spreads in European equities over the course of 4 years. To do this, we looked at 60 individual stocks, 10 of the most liquid and 10 less liquid at each of the 3 indices, the FTSE 100, the CAC 40 and the DAX 30. We looked at the average effective spread for each trade that occurred, both on the venue it traded and on the other competing venues where it perhaps could have traded. Let's take a look at our findings. In this first slide that you see here, we've documented the trend line of all 60 stocks across the 3 indices. It's a relative 100-day average effective spread. In 92% of the stocks that we measured, we see average effective spreads declining, and some by as much as 60–70%, and many by at least half. So 55 out of our 60 sample stocks, we see that decline over the course of 4 years. Here we're looking at the most liquid FTSE 100 stocks, and here we see that over the 4-year period, 100% of the stocks see a decline in the average effective spread. What we've done with this slide is we annotated some of the events which we think are important and contributed to the decline. In the first wave that we see that occurs round about when MiFID is being implemented, there is the obligation of best X that rises to the surface. We've seen an increase in algo trading, technology upgrades, we have competition going on at the same time, high frequency trading, and tick sizes under pressure. Later on you see a second wave occurring around November 2008, and that's in the wake of Lehman collapsing, and we also see competition with the launch of multiple MTFs such as Turquoise and BATS. We see changes in pricing models, and we also putting extreme pressure on average effective spreads. We see a major decline in the markets because as prices come down, you would expect the spreads to be smaller. It's interesting to note that the downward pressure on effective spreads is fairly similar when we look across the other 2 indices. And here we're looking at the most liquid DAX at the north slide and the most liquid CAC south slide. Despite the different market structures and despite the opposite movement in the overall trend of the index over the 4-year period, the trends are relatively the same. With a closer look, and here we're looking at the less liquid CAC, with a closer look we see the distinct waves of pressure, first in 2007 and then in 2008. And if you look at the inset here where we zoomed in on the bottom right hand corner, we see a much fiercer downward trend as the stock prices come under pressure in the declining markets. Tick sizes have been harmonized, algo trading has increased, and more MTFs have launched. Another thing that we looked at was the actual venues. And here we find, if you look at the HSBC at the top here, or DXY, which is a CAC stock at the bottom here, that right towards the end of the time period that we're measuring, it's a very close call now with regard to who has the best spread offered. Although we do find that for FTSE 100 stocks at the end of September, the fiercest competition tends to be between the 2 MTFs, Chi-X and BATS. And for the other indices in the DAX and CAC, it tends to be between Chi-X and the primary market. Over time, though, I think the call will get even closer, and it will tend to be almost impossible to tell who has the closest spread apart from any particular trade or any particular day. This trend that we've seen, where we've seen this collapse and converging of the venues, shows the impact of competition and tends to occur across all of the stocks that we've seen on a relatively stable basis. And here it's worth noting that stock price doesn't play a part in what you're looking at. The slide that you're looking at here shows 4 lines that we've put together. The top line in red over the next 3 slides is the average effective spread, and here we're showing ThyssenKrupp, TKA, which is in the DAX. The next line below it is the volume line. The third line that you see, the dark blue there, is the stock volatility, and the line below it in light blue is the index volatility. And what we were looking here to see was the correlation between the spread and the volatility and how volume impacted. And we think this is pretty interesting. As we see on the left-hand side in the yellow banding, that the correlation, there tends to be a fairly tight correlation of all the four lines. But as you move towards the right-hand side, you see the pressure of competition, and you see the average effective spread trend breaking away from its correlation with volume and volatility. And that is despite the fact that the stock price plummeted at one point from 42 euros right down to 15 euros and then went back to 22 euros. This next slide, we show the same four lines, and this time it's in a CAC 40 stock Vivendi. And again, you see the effective spread and volume being correlated prior to competition right up to the late 2006, even in 2007. But on the right-hand side, again, you see that breakaway of the correlation with volume as the average effective spread has the pressure maintained on it by competition. And here you see the stock price is remaining stable. And in our last example here, which is BATS in the FTSE 100, we show that despite a drop in volume and a rise in stock price, competition has kept the pressure on. Here you see the stock price rising from 1700 to 1940, but you also see that volume compared with 4 years ago has declined. So you've got the decline in volume and the rise in the stock price. But the average effective spread is very much under the pressure of competition and going to be showing that level of tightness that we saw earlier. We think that these trends clearly indicate the impact of competition and the effect of MiFID on effective spreads. This set of 8 charts comprises just one measurement in the marketplace, so watch out for more from us in this space. The topography and the methodology that goes with these charts is available in the deck, and both of these are available on Tab Forum and on our website tabgroup.com. Thank you for joining us. I'm Miranda Mizen. I'm a principal at Tab Group.